All right, this video is about the three primary accounting statements that are required for all small businesses to be able to tell the health of the company and pay appropriate taxes. And those are the profit and loss statement, the balance sheet, and the cash flow statement. So today we're going to look at using those three to determine bankruptcy and whether a company is going bankrupt and when they will go bankrupt. So, first, you will go through all of these different steps, and they all have different formulas. And at the end, you get to these specific numbers. And all of that I had to learn in business school, but luckily we don't have to do any of that right now because we have AI. So what we can do instead is I've put together a uh, successful company and an unsuccessful company. So you can see uh, uh, cost of goods sold here is 550,000, whereas you're looking at a cost of goods sold as substantially more than that here, 700,000. So they're spending way more on the cost of goods sold. Um, what is that? 300,000 or more on the unsuccessful company, which is pretty much going to take down any company when you have an extra 300,000 there. So, um, oops, we are going to take a look at what AI says about our unsuccessful company here. We've got negative cash flow, which you can see on the cash flow statement. We're spending more than we make. P&L statement, we have no net income, so we're not making money. And on the assets, we have a low cash balance, so we can't pay for any materials when we need them. So this is a pretty quick formula to uh, find out if the company's going to go bankrupt or not, and in how long. And this guy's going to go in 2 months, so it's in pretty bad shape. Whereas our successful company, you can see AI tells you it's financially very healthy and profitable. It likes the net income of 150, obviously. Positive cash flow, 170 from operations is great. You paid yourself an owner's draw of 80,000. So when you're paying yourself, that's always good. And on addition to paying yourself for your own work, you're giving the business $150,000 too. So you really made yourself 230,000 this year. And then the liquidity, which is nice if you need to um, sell some assets and quickly buy some other business to triple your profits or something. If there's some opportunity that comes up, you can quickly turn your assets into cash and grab that opportunity up. So that's always great. The easiest way to figure out the health of your own company is, again, drop the or take your name off of those three statements, generate them through something like QuickBooks or Salesforce, and upload them into AI, and then it should tell you why, or either you're profitable or you're not profitable, and where you're spending too much or too little compared to competitors. And then it should also give you, and if you're not sure, if you're not able to figure out why that is, I have links to the successful sheets as well as the unsuccessful sheets, so you can see approximately where your costs fall between what is considered successful and what is considered unsuccessful. And that's it for this video. The next one I will cover, I'll cover each of these statements on their own. But again, I'm not a financial advisor. I've just used a lot of these things for my own company and my own personal investments, and I've made a successful living off that. So, thanks.